Germany's economy has deteriorated further than expected. The ZEW indicator of economic sentiment for Germany has decreased by 27.7 points to a level of minus 16.9 points in June 2012, the indicator's strongest decline since October 1998. Joining me on the phone now to discuss these results and what it means for the German economy is Frieder Mokinski, economic researcher at the Centre for European Economic Research. Frieder, let's start with the results themselves. The survey showed a greater than expected decline. What events dictated this figure, and specifically what factors had analysts not anticipated?
So in my opinion, there are two events which have caused the decline. First of all, I think that the euro crisis got back into the focus of investors through two events. First, the Greek elections, which spurred the fear of a Greek euro exit. And then secondly, the crisis of the Spanish banking sector, which increased the risk of financial turmoil. Secondly, I think that the second factor is the risk of a global economic cooldown might have increased a little bit. This can be seen, for example, in China, where fears are that growth rates will be lower this year, and the central bank has even made the first reduction of the key interest rate since 2008. And then secondly, U.S. employment seems to be below expectations, which is also not a good sign for the global economy.
This is the indicator's strongest decline since October 1998. Austerity measures around Europe are curbing demand for German goods. Is this a warning sign that the gap between the two-speed northern and southern European countries is not as big as investors once thought?
Yes, indeed. Indicators as the GDP growth in Germany, for example, in the first quarter of this year, suggested until recently that the German economy was robust against the crisis in many European states. But the latest figures we saw in Germany, like the industrial production in April 2012, which decreased by 2.2%, question whether the German economy can really sustain its own speed.
Reports from the G20 conference suggest that Angela Merkel's government is moving towards greater economic and monetary union in Europe. In the past, Merkel's government have rejected any policies that would expose Germany's banks to European risk. A banking union would mark a sharp U-turn. What impact do you feel a move towards European monetary union could have on sentiment?
Yeah, I guess most probably this would reduce uncertainty about the future course of the European economies because it would take risks out of it. And therefore, I would guess that sentiment would benefit from this.
The results from Sunday's Greek elections have been addressed as a breathing space, nothing more and nothing less. What therefore needs to happen between now and July's release in this breathing space to improve sentiment? What are your forecasts?
Yeah, in my opinion, the main challenge is that a government has to be formed which is capable and which is also willing to act. I guess if the Greeks are capable of forming a government, I would guess that the ZEW index would benefit from that. If they are not capable of doing that, this will of course mean a problem.
Frieder, thank you very much for your time and insight. That's all we've got time for right now, but stay tuned to Dukascopy TV. Tomorrow we'll be bringing you all the latest on New Zealand's GDP data, the Bank of Japan and the Bank of England. Goodbye for now.